Okay, we should be live.
Hello, everyone, and welcome to Stock Unlock Podcast episode 47. We missed you last week. It was a real busy one, but we're back. Daniel Pronk is Canada's #1 investing YouTuber and some behind-the-scene guys named Jake. And we are the two co-founders of Stock Unlock. One thing that we like to do here is kick it off by taking a comment at the end of last stream. So if you want us to review your stock and we didn't get to it, you can go to the video, which is posted on YouTube, and make a comment, and we might just start with your stock. There were a lot of great ones, Daniel, and we were talking about it before the stream, but of course we could only pick one. And if you're watching on Spotify, you're always welcome to come hang out with us on YouTube Live sometime. We'd love to chat with you.
How you doing?
Afe Gorilla 1299. We also see you in most of the streams. So if you're not here, we're waving to you on the recording. Daniel, do you want to kick us off here with WBA? I believe this is Walgreens, and there's a lot of people talking about the stock in the market right now.
Yes, I can do that.
Let me know if your internet's acting up, and if it is, I can try to share my screen instead.
Okay. Yeah, sorry. I was just sharing that we're live on Twitter. Okay.
Nice.
Can do this. I can do this. WBA.
Daniel.
Let's go. Proper stock today. Also, disclaimer, everyone. My internet has been kind of finicky today. So if I lag, I apologize. It is what it is, dealing with the internet gods. Okay. This stock right away. Oh, if you notice this right here, this is brand new. This is nice. Oh, okay.
Ooh, that stock price chart. What's going on over there? Some new updates?
So the insight score for WBA we can see right here is 2.21, which is bad. If we also take a look at the stock over the past year, it's down 40% over the past year. Let's zoom out a little bit. And from its all-time highs in 2015, it's now down 80%. So this is Walgreens Boots and Alliance. This is a massive company. It's now worth about $19 billion. The dividend yield is sitting at 9% now. Ooh. There's no free cash flow yield, though. So that means there's no cash flow.
Do you have a Walgreens up in Canada?
No.
Okay. They are all over New York. I can say that.
Okay. This company has seen negative free cash flow of $822 million, which means it's losing money. And yeah, that's not good. That's definitely not good. Dividend score is 2.6. I'm not sure why this company is still paying a dividend if its free cash flow is negative, because that means that it's probably using debt or something to pay the dividend, which is not ideal. Financial health is 2.3. Current ratio is below 1. Intangibles are 42% of the total assets. It's bought back shares over the past year, apparently. Debt to EBITDA is 3. Growth score is 1.38, which is pretty bad. Revenue's grown by 1%, but gross profits declining, operating income down, net income down, operating cash flow down, free cash flow down, book value down, tangible book value down. So not really a lot to like there at all, to be honest. Profitability is also 1.6. Gross margins low, operating margins only 1%. It's losing money, free cash flow margin negative, and management score is 2. So
sea of blood out there.
Yeah, this is not a very nice insight score. Let's take a deeper look at these financials. So the revenue, surprisingly, is right at an all-time high of $136 billion. That's a ridiculous amount of revenue. If we go to the cash flow, though, its cash flow has fallen off a freaking cliff. Its operating cash flow has declined from $8.3 billion in 2018 to $1.3 billion now. That's incredible. Okay, free cash flow has also gone from $7 billion in 2018 to negative $822 million now. Yikes. They're maintaining the dividend. It looks like the dividend is $1.6 billion. So the operating cash flow in the trailing 12 months, $1.3 billion, does not even cover the dividend of $1.6 billion now.
And have they lowered this dividend at all as the cash flows have been going down, or have they maintained the dividend?
It looks like they've maintained it.
Yeah, maybe not right this second, but checking out the dividend tab on the stock would be interesting too.
Yeah, let's do it. Yeah, so the dividend looks like it's still intact. They have not lowered it at all. Yeah, I don't know. This looks like there's a lot of red flags.
Yeah, one common term investors use is the term dividend trap. Now, that was not a complete analysis. This is not financial advice. I'll bring up the bingo card soon too, for those of you who are playing Stock and Lock Bingo. But yeah, when the dividend yield goes up very high, you should look into what Daniel just did, which is the operating cash flows, all that. I mean, I would want to take a deeper look, Daniel, to see if Walgreens is investing, why they're losing so much cash flow. I mean, there's so many unanswered questions here that can probably be answered if we had a full hour episode just on Walgreens, but we try to mix it up a bit more than that. I'm curious if you have any theories or if you've heard anything in the market, or if anyone in the chat wants to let us know that has looked at Walgreens. Why are the cash flows falling so much? That is a big red flag.
Yeah, I actually don't know why the cash flows have fallen off a cliff. I
Also,
don't.
wow, we have a lot of suggestions in the chat. Thank you, everyone.
Yeah, does anyone know if you can put your comment there? I'm actually going to go to their investor relations. I'm very curious. So, Jake, if you want to carry the stream for a minute.
All right. Well, the color commentator is here. No worries. So, shout out to our Discord. What I'm about to show you is absolutely hilarious. We're getting a lot of great laughs from this. So, through 47 episodes of Stock Talk, which is now called Stock and Lock Podcast, because we realized there's too many shows called Stock Talk. So, we weren't showing up on Spotify searches. Who am I going to give credit for this? I forgot who posted this. Okay, 5W0B posted a Stock Unlock bingo card. So I'm just going to blow this up a little bit. Take a screenshot. Do what you got to do. If you want to play Stock Unlock bingo, I think we already have a handful of squares that are covered off. And to be honest, this is making fun of Daniel and I in a way, which we love. It's all fun and games over here. Of course, this is for entertainment purposes only. But as you can see, Kat joins the stream. Airbnb talk. I'll take the knock on that one. Daniel Pronk slideshow, Brookfield, not financial advice, all this stuff. So shout out to the Discord community for bringing this up and creating the bingo card. Really gave us a good laugh there. Also, will shamelessly plug the Discord. This is totally free. Links are in the video of all of our streams. And if you are curious to continue conversations with investors, again, totally free to join. We keep a pretty clean slate over here, and there's lots of rooms that you can discuss in. So
okay, I cannot find the answer quickly.
Cool, because I just ran out of bingo content. So
yeah. I went to their press release, and it's just like a mountain of text. So I'm not about to go through that in a live stream.
Yeah. We got not financial advice, 5th time. Grape Jelly, we got you. We're consistent, if anything. And I think someone actually made a bingo comment that I'm looking for in the stream. So you are definitely from the Discord. It is good to see you here.
Okay. Captain Strange. Hello, Captain Strange. See your name all the time. Says CVS is so much better. So what we can actually do here is go to CVS. And let's take a look. So right away, its insight score is 3.05, which is much better than Walgreens. And we can compare the insight score. So side by side, we can see CVS is average, Walgreens is bad. CVS is growing its revenue at 10%. It's also buying back shares. Analysts are more bullish on it. Dividend score is better. The free cash flow payout ratio is only 18%. So the dividend is not that much of a weight on the company's profitability, which is good to see. Financial health is 2.5 though. Current ratio is low. Intangibles are 50% of the total assets. And tangible book value is negative $50 billion. That's crazy. Growth is much better though. Looks like the operating cash flow is growing. Free cash flow is also growing. Profitability is also better. It's actually profitable, has a positive free cash flow margin. Management is doing better. It looks like there's low stock-based compensation going on, which is always good to see. The price of free cash flow is also only 5 right now. Wait, hold up.
Daniel, I know the things that get you excited, and very high free cash flow yields. You always light up like a little kid on Christmas. It's really great.
That's a 20% free cash flow yield, man. That's crazy. What? Okay, we're going to take a look here really quick. What is going on here with this?
The thing with CVS, though, that I remember, because we've looked at the stock before, they're getting into healthcare, things like that. So it is interesting to do a direct comparison to Walgreens, but they're taking a lot of big bets. There's a CVS on almost every other corner in New York City in Lower Manhattan.
Okay, well, they did $20 billion of operating cash flow in the past year. So, like, that's cool. And then free cash flow of 17.6 billion in the past year. That is crazy. Now, what are they doing with this cash flow is the question. So they bought back $3.2 billion worth of shares. They paid $3 billion in dividends. They took on more debt, which is interesting. So did their cash increase by 1.6 billion? So they're doing something with their cash. They're investing it, but they're also returning a lot of it back to shareholders. They've returned about 7% to shareholders in the past year. Actually, about 8%. So that's actually pretty good.
Yeah. They also have $61 billion in debt. That's what I remember looking at this business. So it is interesting to see how they use their cash position. Like, they're taking bets, moving into the healthcare space, trying to work more with doctors. Like, I'm not even against that. Like, you have to keep on innovating. So cool. But I've always just been really confused at the management of this company, just as you're saying here, Daniel. Like, we're kind of walking into a really confusing situation because they're generating cash. They're taking on more debt. They're giving some of it back to shareholders at the same time. Like, it's almost hard for me to wrap my head around, like, what their goal is, like what management's goal is with how they're managing all the cash coming in.
Yeah, I agree. Jake, what do you think about Airbnb being added to the S&P 500?
I'm pissed off about it because it happened too soon. I wasn't telling people to buy shares because I'm not a financial advisor. I was telling everyone that I was buying shares when it was at $90. I just looked at my buys and sells on that, Daniel. I was picking up shares at $83, $84. It was like a kid in the candy store out there. Now this has flown all the way up to 145. And most people will be like, hey, shouldn't you be happy? I'm like, no, it happened way too quick. I wanted this stock to be like 15 or 20% of my portfolio, and I'm stuck at 5% because it ran up too fast. Someone go short Airbnb and get me those cheap shares. That's what I want.
Financial advice, go short Airbnb. Jake approved.
Go short Airbnb so the shares get cheaper for me to buy some. I'm trying to find a comment up here, Daniel, that I really want to bring up. Crap.
So wait, you would have made Airbnb 20% of your portfolio. Did I just hear that right?
I would have, if Airbnb stayed down at $85, I might have sold most of my stocks and made it over 50%. I'm a Charlie Munger, dude. I would take a bet like that. 8% of my portfolio right now is a penny stock. I love it. It's almost doubled in value. I don't share it on the stream, but you and I are different investors there. That's what makes the show fun. You go around and you own 9 or 10 banks at the same time. What's that? Just pick one. I love it. So I'm trying to find a comment here where someone was like, do you know a good way to piss Daniel off? Beyond Meat is a good buy at these levels. So I'm trying to find that comment, but it's been a while since we looked at the stock. So I think it would be fun. Oh, you got, from Stock Turnbull. I mean, the last name Turnbull, if that's your real last name, that is a great play on words for stock investing right there, because you are turning bullish on Beyond Meat. Let's check it out.
I have not looked at the stock in a while. Okay, so it's at $10 now. Right on. Okay. It is. Let's take a look at the past year. What has the stock done over the past year? It's down about.
It has 50. Not went bankrupt.
It's not bankrupt yet. They do have some cash left still. Insight score is 2.21 though. Not good. So they've lost $211 million in free cash flow over the past year, which means they have 12 months left of cash now. So they're still burning through their cash. Not quite out yet. At this rate, it will take another year for them to run out of cash. Current ratio is 9.1, which is good, I guess. Shares have increased. Cash is more than current liabilities, so they can handle their debts, I guess, in the next year.
Yeah, they have a little over 1.1 billion in debt right now.
Incredible. Their growth has declined their revenue has declined by 23% over the past year, so they're losing revenue significantly. Gross profits have declined by 130%. Operating income is up, I guess. Operating cash flow is up, but I think the company's losing money. So 1 second here.
Yeah, yes. I just pulled up the total cash graph, which you like to do, and it's just a straight line down as their debt is like constant. Yeah.
Yeah, so their gross margin is now negative. Like, this is so bad. So think about that. This company just making its products is losing money. That's before paying salaries. That's before paying utilities and all of the operating expenses like marketing and everything. Just Beyond Meat making its product, it loses money on. So this company is so far away from profitability that I am so bearish here. Their free cash flow margin is negative 60%. Like, how are they going to get this up to even break even before they run out of money in the next year? I just don't, I have no idea. Management score is 1.14, which is very low. Stock-based compensation as a percent of revenue is almost 10%. So on top of this incredible fundamental performance right here, this beautiful fundamental performance, the management is also paying themselves 10% of revenue as stock-based compensation, which is incredible. ROIC is 41%, ROC 28%, return on equity is negative 94%. It's truly incredible numbers here. So let's go and take a look now at the income statement. Oh my goodness. So the revenue was 406.
Just a
Sorry,
little call here. Can you tick the X slider all the way to the right? Then we'll get the most recent one.
Oh, this is the bug, Jake.
Oh God, I called out the bug. I have
live bug on your new charts.
I'm sorry, everyone. I'm gonna fix that. My bad, dude.
Okay, so overall revenue, you can see it's been coming down. Now, what we do on Stock Unlock here is the green bar is the revenue, and then the orange and red bars are the company's expenses. So the dark red bar is the cost of revenue, and then the other bar is the operating expenses. So the cost of revenue is above the overall revenue now, which is why the gross profit is negative. And then additionally, they have $250 million of operating expenses. So for them to become profitable, the green bar has to get above the red and orange bar, which doesn't seem like it's going to happen anytime soon. So they're in fact losing money. Now, then Jake was saying, you can check out the total cash position of the business. So back here in the first quarter of 2021, they had $1.3 billion of cash. And you can see that it's just gone down consistently ever since then. So this business is quite literally running out of money. And this is the trend. I mean, they raise money, they get some cash, and then it goes down. And then they raise money again, they get some cash, and then it goes down. And that's because this business is losing money. So every time they get money, they just burn it. And then the question for me is just like, at what point are they not going to be able to raise any more debt or do any more dilution to continue getting money? Like, when are investors just going to stop giving this company money to survive? It's basically a zombie business. So I don't know when that's going to happen. I think it will happen at some point, and I am very bearish on this business.
Yeah, I think a good way to wrap up here, and if anyone's curious why I'm laughing, it's a deep thing. I'm laughing at Daniel's reaction to Beyond Meat. One thing that we didn't see there is if you go to the insider tab, it was a wall of sells even as recent as September 5th. And it's all the insiders constantly selling and liquidating their shares on the open market, which shows that they don't have any confidence either. But yeah, fair comment from Vijay here. Question, how many times have we discussed Beyond Meat in the last year? And my response was, I lost count. But point being, and one of the reasons why we built Stock Unlock actually is a lot of people go out here and pioneer great stocks. Everyone has to have a great stock pick, wear it on their fist, whatever. And that's fine. But there's a complete other side to this coin about avoiding bad stocks. And it's arguably more important. Like, you can almost do process of elimination, look at 20 stocks and just cross off 15 of them off the bat, either using Stock Unlock insight scores or doing a bit of your own research. So I find it interesting, but point taken. I think that we've mercilessly beat Beyond Meat with a stick. And now I regret that I said that because it sounds a little weird. So we should move on.
Yeah. I mean, I'd just like to stay updated with it because I am genuinely interested to see how this plays out.
I'm sorry.
Okay. All right. Let's move on, Jake. Okay, we have a comment here from VJ. Please review Pacey. Okay, we can do that.
I'm bringing up this company's investor relations because we get this comment all the time. I think it's a payment processing company, and what people are freaking out about is their retention on their customers, if I recall correctly. But speaking of the devil, we do talk about payment processing companies a lot.
Yeah, it's like every stream. Wow. Those returns are actually insane though. In 2014, this was a $15 stock. It's up 1700% over the past, what would that be, 9 years now?
Yeah, I mean, their financial performance has been incredible. And again, I think when you take a look under the hood from their financials, the retention on their customers is incredibly high. So people are starting to make arguments, which may be correct. I don't know that this company has a strong moat. I think it just takes a lot of analysis to fully understand their competitors and everything.
Yeah, I mean, their insight score is 4.3, which is pretty high. I mean, just look at that. Dividends are very good, growth very good, analysts very good, financial health very good, profitability very good. Management is average though. So I'm going to take a quick look at this. Okay, not bad. Growth, perfect 5.0. Revenue grew, operating income growing, operating cash flow growing, free cash flow grew 40%. Profitability, gross margin is 84%. That's crazy. So stock-based compensation is very high though, which is where the management score is going down. So stock-based compensation as a percent of free cash flow is almost 40%. So almost 40% of the free cash flow is offset by dilution from stock-based compensation. Okay. Is this one of those businesses where revenue just keeps going up?
Oh yeah, I mean the
Oh,
financials,
yeah.
the financials of this company are absolutely beautiful. I'm really trying to find a slide on their investor relations page right now where it shows their customers, and I am failing to find it unfortunately. But if I do, I'll let the stream know.
Yeah, so they're definitely growing quick. Yeah, that's super interesting. $300 million in free cash flow. The one thing I did notice though is this right here. The free cash flow yield is about 1.8%. Price to free cash flow is about 57, which is quite high in my opinion. But if we take a look here since 2015, so over the past 8 years, their average price to free cash flow has been 95. And it's actually selling near its lows right now. The lowest the price to free cash flow has been 50. So it is selling near its lows, but that's still a pretty dang high price to pay for this business, in my opinion at least. So Jake, you said this is some sort of payment processor?
I'm kind of biting my tongue on that now, but that's what I thought. I looked at this company once before, like very briefly. I'm combing through their investor relations pages right now, and I just cannot find where they mention their customer retention. But I really think that that's where a lot of the bullish signals come from this company. Let's see, easy to use HR and payroll technology. So it looks like they handle B2B like company payrolls and stuff. So specifically payment processing, but from business to paying employee, as opposed to a consumer payment processing, which is obviously a PayPal.
Oh, yeah, that is pretty interesting. Yeah, I just think that it looks kind of expensive. What was I going to say? I also am wondering why their free cash flow margin is about 18%. Because for a payment processing company, that does seem quite low. What is their operating cash flow margin?
Yeah. I mean, it seems that they, just from the quick look I had, if I had to guess, it looks like they're reinvesting a lot of their free cash flow back into the business for software development and things like that. Also, in terms of the business side of things, the stickiness of these softwares for businesses are really big. So once you have this company set up and it's your HR manager and you're paying all your employees through it, it is a headache and a half to switch to another company. So if they're doing this and they're doing it well, which is proven by their numbers, and they're able to continue to sign up customers and they don't churn. While I do agree with you on paper, the price of free cash flow looks expensive. I think what we saw in the Freeform tool is this price of free cash flow has actually been fair to pay because their compounding growth rate on that cash flow and revenues over time. Not to make a comparison to Amazon, because that might not be fair. But as we know, I think Buffett bought Amazon at a price of free cash flow of 80. People are like, hey, that's not so high. But technically it's not high if you look out and try to forward project what they're going to make and then discount that back. Obviously, I know you know that, but I think that's like the interesting discussion here.
Yeah. Yeah. I mean, it's growing super quick. If they can continue that growth rate, then I would agree it doesn't look crazy expensive, but when you have that high of a price ratio, you definitely are paying for growth. So if that growth stops, then, that's the risk.
Yeah, that makes sense. It looks like a lot of people are playing stock unlock bingo here, which is
Oh my
honestly hilarious.
goodness.
I'm gonna show this once more because I think there's some more people in the stream, just so people don't feel left out. But I'm just gonna make this really quick, like 30 seconds. Someone in the Stock Unlock Discord created what is probably one of the best things ever. So this is Stock Unlock Bingo. I'm going to leave this up if anyone wants to take a screenshot of it. But if anyone's hit bingo a few times, I think that, geez, I mean, you might just hit a bingo starting the stream here. Yeah, so that's Stock Unlock Bingo. Shout out to Discord for bringing the good culture there. I mean, absolutely hilarious.
That is hilarious.
It's crazy.
Okay, Jake, would you like to take the next one?
Oh, God. I usually try to find symbols that I've never seen before.
I see what? Ralph. Ralph has one we've never seen before.
Well, I clicked right before that, so maybe we can queue up Ralph for the next one. So can you please take a look at EVGGF? Yes, we can. I will share my screen again here.
I think that might be Evolution Gaming.
Ooh, gaming companies are fun.
By gaming, I mean gambling. Yeah, it is.
Hey.
Oh, no, it's Evolution AB. So, yeah, we've actually taken a look at this one before.
Oh, we have?
Yeah.
All right. Should we breeze through it then? I mean, people are probably going to predict what we're going to say. The financials look absolutely beautiful because this is a very high insight score. But yeah, Daniel, let me know if we should carry this one forward or not.
Yeah, go for it. Do a quick look. I think we haven't looked at it in a few months, so maybe there's an update here.
Yeah, so let's see. Evolution AB engages in the development, production, marketing, and licensing business casino solutions to gaming operators. Okay, so this is a cool business where it seems that it's not actually the literal casino, but it's the B2B companies that power casinos. And it seems like a casino would come to Evolution AB to get gambling equipment and solutions from them. So what we always like to look at here is we'll pop open their insights. I'm not going to go through all these individually. You can predict what I'm going to say. Great, almost all across the board. Not really too much here to knock at. I really like this profitability. So one thing I'm going to take a quick look at is I want to see if their margins are increasing or decreasing over time to see the kind of pricing power this business has. And right off the bat, this is pretty great. You can see that over time, their margins have increased and they've settled at a pretty high level, and they are maintaining this over time. So that may hint that this company has a strong moat or pricing power. Not that you can take that away definitively from just looking at this, but that's pretty strong performance there. Other things I really care about is just kind of understanding the balance sheet, seeing what kind of cash they have on hand. Just to let people know, it does look like this is reported in euros, so we are not talking about dollars here. Let's see, the cash position is a little bit over €500,000. Okay, want to check the liabilities and debt. Yeah, not a ton of debt. Okay, so balance sheet looks pretty healthy. Nothing wrong there. Go and check out the income statement. That is beautiful.
Yeah, their revenue grows with like basically no growth to expenses.
Yeah, and to tie this all together too, so the yellow line and the green line here are talking about revenue versus the cost. So as the gap increases, it means that their margins are going up, and that's also what we saw over here. If you remember from the start of this, margins are going up, so that's great. Wow, that was a pretty graph. So this is the maybe fun, not so fun conversation to have about this stock, which is more of the morals around gambling. I know some people have members of their family where gambling has ruined their lives, and vice versa. There's other people who say, hey, it's a free country, do what you want. I don't know how I feel investing in gambling companies. It's a little bit different for like a cigarette company or something like that for me, where I probably try to stay away from it. I would have to think about this one more, but every investor is obviously able to come to their own decision. And just so you know how Daniel and I operate, whether or not you guys own gambling companies or cigarette companies, we would still be your friends. I'm not here to judge anyone for their investing decisions. These are all personal, but let's see. We got some insider transactions here, some buys, some sells. Not too many, so nothing's really like jumping off the page for me here as a red flag. Yeah, so not financial advice. Mark it on your bingo again. But what I think here, Daniel, is I personally don't know a lot about the casino space. I do not know what kind of competitors this company has, so I'm intrigued about it to take another look. I'll actually add it. You can tell I do some testing here, so I probably need to manage my watch list a little bit, but I'll add this one to my watch list and take a deeper look. I'm curious to check out, again, who their competitors are, try to see if they're going to maintain this pricing power, because casinos are not going away. People are addicted to gambling, and anytime I'm going to whatever kind of event it may be, which is not that often, in Vegas or something, these casinos are always filled and people are gambling lots and lots of money. And I know, because how math and statistics work, that they are guaranteed, meaning the house, to win on those games. So I might not be the one at the table, but hey, we like making profit, so I'll be thinking about this one more. What do you think, Daniel?
Yeah, I mean, its fundamentals look insane, and they've remained very healthy for a long time. So the business seems to be doing quite well.
Yeah, well, thank you for the suggestion on this one. It was fun to come back to it. You're gonna take a Ralph's comment now, Daniel. You want to lead that one?
You actually can, because I need to run to the washroom quickly.
So I'm laughing because I'm still not used to people saying washroom. Let us know in the chat. Do you say washroom? Do you say bathroom? Like, what is it? Where are you from? I guess this is a hint that lingo changes, but yeah, Daniel.
Yeah, live stream stuff. I'll be right back.
Yes, these are recorded live. If you're just joining, we do these shows weekly, or at least we try to. It is a just for entertainment sake stock analysis, stock talk show, and we like to interact with the live chat. Daniel and I are both the co-founders of Stock Unlock. So I'm going to try to find your comment here, Ralph. It looks like Daniel already has it up. INQQ as an India Internet and E-commerce ETF. Can you look at it? Yes, we can. INQQ. So, disclaimer, I actually own Indy, INDY, which is an ETF from iShares for India exposure. So it's interesting that this one concentrates on the internet. Let's see. No dividend. If we want to just compare this quickly to the SPY. So this is a new feature that we added. We have changed up the stock prices a little bit so that you can very easily see and compare this to other stocks. I'm actually going to type in another India ETF that I know about, and we can compare these throughout time. I guess this ETF has not been out for as long as the other one, so we can't go too far back in time there. All right, it looks like 25% of this is in financial businesses, as you would expect, 23% in consumer discretionary, obviously heavily in India over here, 86%, and then a little bit light exposure in the United States. So one thing I like to do in Stock Unlock is we can go down to their holdings, and for all the stocks we're able to, we actually do show their insight score. So we could look at all the top holdings of these stocks. It looks like the insight scores are average to decent. So it would take a long time to click on each one of these companies. Yeah, Ralph, thank you for the suggestion. I'm realizing that we don't talk about ETFs too much on this show. We are planning on making a lot more search features and things like that for our ETFs. So yeah, it looks like this one has 29 different positions, fairly equally distributed. There's nothing that's overly, too high of a percentage. There's no double-digit ones here. Yeah, it seems decent. I would want to understand how this compares to the ETF I own, which is Indy. So Indy is a more like general purpose one. But yeah, and if you're using Stock Unlock, come and check out this new UI here. It's very great and easy to just come in, search other companies, add in, and just easily compare. Daniel, did I hear you come back here? I realized I was choking on an ETF because I was like, have we ever even analyzed ETFs on the stream? But yeah, it's very fun to walk through and kind of see what the top holdings are and just looking at their insight scores here, which is what I'd say one of the most helpful features here.
Yeah, so in the future, we're also going to be taking the average insight score of the ETF holdings and giving the ETF an actual scoring based on what it holds.
I can't wait. Yeah, a weighted insight score. Ooh.
And then that will lead to us being able to screen for ETFs. That will be the
Oh.
next step.
Oh my gosh. Yeah, maybe time for a very quick update announcement on Stock Unlock until we get back into the stonks. We have onboarded 2 new team members to Stock Unlock. We have doubled the team size from Daniel and I to now 4. So there are now 2 more engineers working with us. Obviously, there's onboarding periods and stuff like that going on. But if you have noticed an increase in product velocity and feature drops, it is because we are finally and now increasing our engineering velocity. So if you are a subscriber to Stock Unlock, thank you so much. You are helping fund us to create this company and continue to bootstrap it to greatness. We still believe that these are early innings in the baseball game for us. So thank you everyone for the support. We know that we have been mentioning that a bit on the show. I wanted to give you an update there. Expect a lot of greatness to come. Anything to add there, Daniel?
If you're playing Stock Unlock Bingo, get ready.
Okay. Cat in the stream. Mark your bingo card.
Knock it off, everyone. Okay.
Oh,
there's
man.
another one at my feet. I have 2 cats. There's another one at the feet. Right on, Sal. Okay, we're going to take a look at HPQ now. This is actually, I believe Warren Buffett owns this stock and has been buying it in its current price range. So it's a $28 stock now. They make HP computers and HP printers. So why I think, and the comment's kind of funny, convince me not to buy HPQ. So HPQ trades for HPQ trades for a price to free cash flow of 10, which means that it has a free cash flow yield of 10% essentially. Now they pay a 3.7% dividend, which means that they have about 6.3% left in that free cash flow to either pay down debt or buy back shares. So I'm actually going to look here what they do. So they have $3.5 billion of operating cash flow. They paid off $1.7 billion of debt in the past year. They also repurchased $850 million of stock and then paid $1 billion in dividends. So if we add this up, actually, $1 billion in dividends plus $850 million in stock buybacks plus $1,750 in debt, they're basically using all of their free cash flow or operating cash flow to pay off debt, buy back shares, and pay the dividend, which is honestly not that bad. So let's take a look. Are their liabilities going down? Liabilities have been declining, which is good to see. But let's take a look at the income. So I'm going to zoom into here. So this business's revenue has actually been declining. It declined by about $10 billion over the past year. Cash flow has also declined from, or this is operating cash flow, declined from about 12 billion in 2014 to about 3.5 billion now. And cash flow has not grown over the past 7 years. So it's not really a business that's growing its fundamentals. Why I think Warren Buffett is buying it is just because it's got a 10% free cash flow yield right now, which means the business can return 10% to you through buybacks and dividends. So it doesn't even, the business essentially does not even need to grow its cash flows to give you a 10% return as a shareholder at this point. So I think he sees it as like a value play.
This is also a company that's been around for a very long time, I think. Like, we had an HP printer in my house, but this company always reminds me of IBM in terms of the tech space. If it's just one of those tech companies that just has not really been changing the game that much. I mean, there's been a lot of new entrants, obviously, all the names you know, Google, Apple, Microsoft, Amazon. Those are companies to me that are innovating and constantly creating more value, while like IBM, HP for me, maybe it's just like a news cycle thing and I haven't been paying attention to them as much, but they've just kind of seemed to be quiet for a while. I think we saw that in the operating cash flow graph. I mean, my question here is, are the best days behind them? Is this just going to be a cash flow business where they have contracts with companies that they keep going and then they end up buying down the shares and getting the company profitable? I don't know. I would want to find something to get excited about for the person that suggested this one.
Yeah, for me, the thing is that yes, you know, this business can give you 10% right now through dividends and buybacks. But my question is the cash flow going to drop in the future? Because if it does, then that means it will be able to return less cash and dividends to you in the future. And ultimately that your yield, your free cash flow yield, would go down in the future. So the business basically has to maintain itself currently just to match the historical returns of the S&P 500, which I don't love and I'm not optimistic about. So
Yep.
I'm hesitant.
Yeah. Maybe as we're searching for another stock here, I can just add my 2 cents on the tech side. The way I like to think about technology businesses and why there is so much stock-based compensation in some of the best companies that you see, we just saw it in PayC, is that engineering talent and tech talent is very hard to come by. Companies have to pay top dollar. And the thing I ask myself about people at IBM and HP, especially when there's all these other companies around, is are these companies going to be able to attract and keep that top talent that's actually going to push new barriers for them to have innovations for their customers that create more market value over time? I don't really see it, honestly, in companies like HP, unless if something changes. Like all the smartest people I know are not being dazzled by the IBMs or the HPs. They're going to AI companies, they're going to Microsoft, they're going to Google, they're going to places where they know that they can innovate, get stock comp that's actually going to go up. So, yeah, I think that we've seen that play out for HP for a while. They've just been a little flat. And, show me something that's going to make that change, right? Like, what is going to change the nature and culture of this company? At the end of the day, and I say this all the time, companies are just people doing things. People overcomplicate it. There's humans that go to work every day that work for these companies, sustain and build their products, especially tech companies. And if you're not getting the top talent, you're not getting people that are excited that are working there, and your culture's kind of gone to crap because the company stagnated for the past decade, like what's going to change that?
Yeah.
Rant over.
So what you could do instead of trying to own these tech companies with their high stock-based compensation and whatnot, and moats being disrupted,
I know what
you
you're going
could
to say.
just own Waste Management, which takes care of garbage. They're a garbage company, but they're not a garbage company because look at their stock. It is up 305% since 2011, and it has outperformed the SPY, I believe. It had to have. Yes. So
Nice.
this is literally just a waste management company. That is their business, and it has outperformed the S&P 500. I've seen this stock a lot. It's actually a stock on my watch list because I would love to own this business. The problem is it's not cheap, and that's where I always get hung up on it. So the reason I like Waste Management personally is because every city wants their city to remain clean, and everyone wants to live in clean cities. Like, imagine if there was no waste management. Imagine if there was no garbage companies, or if garbage just piled up on the street everywhere. It would be a big problem. So I think that this company is always going to have business, and I think that it's going to be able to offset inflation and just continue to grow over the long term.
There will always be garbage.
Exactly. There will always be garbage that needs to be moved and managed, and therefore waste management is inevitable. So their operating cash flow has grown to 4.3 billion. It's right near all-time highs right now. If you take a look at free cash flow has actually come down from 2.6 to 1.5. They're probably doing some sort of increased investments in capital expenditure right now, which is exactly what's going on. So for this business, I would like to take a look at operating cash flow. You can also see that stock-based compensation is only $60 million. So relative to operating cash flow, that's maybe 1.2 to 1.3%. So very low stock-based compensation going on. So let's take a look at the price of the business now. Price to free cash. No, let's do operating cash flow for now.
Yep. The person who commented this sent another comment and said it's always expensive, unfortunately. So
I actually would disagree.
Yeah. Well, walk us through it.
So right now the company is trading for a price to operating cash flow of about 15. And we can see that it's grown at a compounded annual growth rate of 8.2%. So back here, for example, in 2014, this business was trading for a price to operating cash flow of 8, which is almost half of what it's trading for right now. So you can see that actually as time has passed, the price ratios on this business have expanded. And I mean, back here, even in 2008 during the Great Recession, kind of an outlier, obviously, but it was trading for a price ratio of 4.7. So really, since the Great Recession, it's grown its price ratio at 8%. So it's not always been expensive. It's just consistently gotten more and more expensive as time passes. So if we actually take a look here at operating cash flow per share,
A
yes,
lot
these
of
are the met.
people. Sorry, Daniel, go ahead.
So what I like to do is try and figure out where the returns of a stock are coming from. So here we can see operating cash flow per share for Waste Management has grown at 5.36% per year. The price ratio, though, price to operating cash flow, has grown at 8% per year. So the majority, oh, sorry, I'm getting ahead of myself. The stock price has grown at 13.46%. So the majority of the stock price returns since the Great Recession have actually come from price ratio expansion. It has not come from fundamental growth. You can see 5.36 plus 8% is about 13.36, or sorry, 13.26%. So again, just the largest portion of the stock price returns have come from this price ratio continuing to go up. So what I'm waiting for is for this to somehow correct at some point, because I don't believe that this price ratio can go up forever. And at some point, it has to stop expanding. So I want to wait for that to happen. And I'm just going to be patient because I don't really want to pay this price ratio for this business.
I've got 2 dad jokes.
Okay.
So you want the stock to go to the dump before you pick it up,
Yes.
and you think that the valuation stinks?
I don't think it's unreasonable, but I don't think it's attractive enough for me to want to buy it.
Fair enough. So I rudely interrupted you during that. Apologies there. What I was going to mention, a few people in the chat were mentioning and chiming in, and I just think that's interesting. I'll share my screen here because you can actually see this in Stock Unlock, which I, of course, love. The Bill and Melinda Gates Foundation owns nearly 9% of this. So
You were not sharing your screen.
yes, I unfortunately lost control of my mouse there for a second, but I think that we're back. My computer's acting up a little bit. Yes, so we are now on the ownership tab for the stock that we were just looking at here. And we can see that the Bill and Melinda Gates Foundation Trust owns 8.8%, about $5.6 billion worth of the stock. So just interesting to see. There's a lot of negative press about Bill Gates now, which honestly makes sense. Someone who's kind of like preaching to everyone about green energy while they're like flying their plane around everywhere, like buying up all the farmland. I don't know. I'm suspicious, but that's what the media wants us to think. So who knows?
Who knows what's going on? Billionaires, man. Speaking of billionaires, we can take a look at Bill and Melinda Gates holdings at the site called datarama.com. At some point in the future, you will be able to view this on Stock Unlock, but it's not built yet. So,
and it will be way better.
And it will be way better. This is pretty bad. But anyways, you can see here the Bill and Melinda Gates Foundation, 31% of the portfolio is Microsoft, and then 20% is Berkshire. So basically 52% of the portfolio is these two companies. Then Canadian National Railroad, then Waste Management, and you can see all of the other stocks here. I've taken a look at this portfolio, and basically what I've come to the conclusion, or the conclusion that I've come to, is the portfolio is dividend growth stocks with extremely wide moats, where you can basically be almost certain that the business is going to be around in 20 to 30 years. Like Canadian National Railroad, I think that is one of the strongest moats you can ever find. Berkshire Hathaway, Microsoft, like Waste Management, as I just said, I don't think that business is going to go anywhere in 30 years. So Bill Gates' portfolio to me is just like they wanted to put the capital somewhere where Bill Gates could just forget about it for the rest of his life and not have to worry about it ever again. And then also collect dividend income.
Yeah.
So yeah, it's an interesting portfolio for sure.
I have this very weird long arc life plan. I know you and I are into infinite games, right? That's why we're building a company. Finite games versus infinite games. A finite game would be like a game of pool. Infinite games are like building businesses or investing. You know, being in stocks for me, like Airbnb now and stuff like that, where I find good growth, it's a little bit more risky, but you know, you do that to attain some capital and then over time kind of move over and park those into just the same type of stocks you were talking about, Daniel. Like once you have enough income, or rather stock equity, where the dividend payments are sustainable enough where you could actually like live off of them and use sites like Stock Unlock to look at the sustainability of that dividend and growth, blah blah blah. It just seems like a very nice spot to be in. So I definitely don't disagree. I don't know how anyone could with that mindset or the type of stocks you just put down, because they return cash to shareholders. The business likely isn't going anywhere, and it seems like there is some growth prospects too. And who's going to shake their head at that?
Yeah, definitely. Like it's a boomer portfolio, man. Well, almost. It's got Microsoft.
A boomer portfolio.
Yeah, like it's like it's your strong moat companies that are just very consistent, not going to go anywhere, pay their dividends, not exciting. And that's that, there's no like Palantir in there. There's no Tesla. But
yeah,
fair enough.
I love it.
I respect it.
I'm trying to scroll back to find a stock. We almost picked it from a comment from the last stream. Also, it's impossible to get all the stocks. One chance that you can get for us to analyze your stock is once this video is posted, make a comment on the video. Yes, that of course helps us out on YouTube also. We're being transparent about that, but we try to give back and also start off the video with one of those stocks. Daniel, I keep on seeing ULTA. I've probably seen it 6 or 7 times. Have you ever looked at this stock, or do you know what it is? Because it seems to be one of the most popular suggestions here.
I have not looked at this one, but very quickly.
Yeah.
There was someone, the dividend investor said, I also added CN this week. And I'm bringing that comment up, 1, because we were just talking about it, and 2, because I also added
it. Sorry, Canadian Railroad, for those who aren't familiar.
Canadian National Railroad, and then I also bought CP Rail. So the Canadian railroads are in a pretty good correction. I've been waiting a long time to get them. I think that they have some of the best moats I've ever seen. I don't think that they're going to go anywhere. And I bought them in the retirement accounts. I had some cash in there, and I was like, it's time.
What's the ticker for CN? I'm trying to look it up, and CN is giving me an Xtrackers All China Equity ETF.
The US ticker is CNI.
CNI, okay.
Yeah.
Oh, I see that. That's the ADR for the, CNR.TO. That's the main one. Yeah, I remember you going over this one before. Well, congrats on your buy. Yeah, it looks like it is in a relative correction right now. Well, congrats. Not financial advice. Do your own research. Mark down the bingo card again. I think that we got about 5 chips on that card there, but...
Yep. But yeah, the railroads are being hit right now, so I thought it was a good time to start a little starter position. They're very small still, but I have officially bought them.
Yeah. Nice. I'm taking a look at them right now in Stock Unlock. It's got a little dividend, free cash flow yield around the 10-year bond. Not too bad.
Exactly. Exactly.
It's like we hang out a lot or something. What's going on?
There you go. Scott Turnbull says Stock Unlock is the best €5.62 a month I spend. Thank you. It's only going to get better. Only going to get better. Okay, we were talking about Ulta.
Oh, yes, we were about to. That was such a tease, too. Like, if we forgot about that, I would have felt bad. It looks like a beauty company.
We would have been canceled.
What's up?
Sorry, I was making a joke. I said we would have been canceled if we forgot about it. This is, yes, a beauty company with beautiful returns. Wow.
Oh, dad joke alert.
Dad joke. Okay. It's up about 1,100%. It's definitely outperformed the S&P 500. Insight score is 4.03, which is good. Free cash flow yield's also 4.77%. That's not bad. Let's take a quick look at some insights here. Balance sheet looks very strong. It's debt-free. It's also been buying back shares. Growth is good at 4-ish. Revenue's growing. Basically everything is growing. So that's great to see. Profitability is a 3.4. It's profitable business. Nice. Management score is 4.7. Very nice metrics there. And then the valuation looks like it is currently not bad. It's selling below its historical average price ratios. Okay. So if we take a deeper look here, its operating cash flow has been growing. It's right near all-time highs right now of 1.4 billion.
That's gorgeous.
It's not bad at all. Low stock-based compensation, gotta love it. So it looks like they use the majority of their cash. Actually, I would say basically all of their free cash flow to buy back stock. So that's how this company returns cash to shareholders. And free cash flow has been growing. So as free cash flow grows, it looks like they buy back more and more and more stock. Okay, interesting. Only thing here is I don't know anything about this industry. So the business seems to be killing it, but I don't know anything about that industry, so I really can't say too much.
Daniel, you're trying to tell everyone that you just woke up like that and you didn't put any makeup on this morning for that beautiful face? Come on.
That's what I'm telling you.
I'm trying to see if this is a no debt business also. Because when you look at their description on Stock Unlock, they have over 25,000 different products, apparently, over 18,000 employees. This company's headquartered in Illinois in the good old United States of America. I mean, it looks like people really love their products. I mean, I agree with you, Daniel. I am so out of my depth here. I don't like to invest in things I don't understand. Yeah, this business has no debt. The financials are beautiful. The growth is beautiful. I just don't, I wouldn't understand the business. I don't understand the consumer. So this is one of those sad ones for me where I want to cheer people on from the sidelines, or maybe I got to rope in my girlfriend who knows a little bit more about this stuff to teach me how these products are and if people are buying them a lot. I would just, I want to be able to explain what I own to a 5-year-old, and I'm not sure if I can do it with this one.
Yeah, I agree. I'm looking at its price ratios right now too, and the few price ratios that I've looked at, it's selling well below its averages, like 30 to 40% below its average price ratios. So, I mean, if this business can continue with this strong growth that it's been seeing, I mean, it's grown its free cash flow at a compounded annual growth rate of 30%. Let's take a look at the past decade. Yeah, 30% over the past decade. Revenue's grown at 16%. So if it can continue that, then honestly, a price to free cash flow of 20 looks like not such a bad deal. I just don't know if it can continue that, which is where I would get hung up personally. But yeah, I mean, it's killed it. It's been killing it. It's in a big dip. Its price ratios look good. And everything with it, its fundamentals do look solid. Looks very solid.
Awesome. Well, this is near the end of the stream. We usually get a little casual here, talk business shop, take live questions from the chat about that. Daniel, I have a pretty exciting unofficial announcement for something I've been really lagging on this week that we need to announce to our subscribers.
Okay.
So one thing, if you have been following us closely, we haven't really announced it too loudly yet, is the NASDAQ reached out to us, and we are now in an official data and co-marketing partnership with them, which is incredibly, incredibly exciting. So I will send out an official communication about this with Daniel. Daniel is actually coming to New York in October, and specifically on October 9th, we are having some co-marketing events with the NASDAQ in Times Square, which is pretty cool. So what we have on the table here, and again, I'm going to send out a more official communication about this, open for Stock Unlock subscribers only. We are being offered a VIP area at the mezzanine in Times Square for bell opening with the NASDAQ. Right now, across friends and family, we have about 10 of those slots filled, and we have 10 open ones that we are leaving open for Stock Unlock superfans. So if you can get to New York on October 9th, we are going to do our best to plan a New York City day with some breaks in it. In the morning, we would be at Times Square in the VIP section at NASDAQ headquarters for bell opening. That should be pretty exciting. After that, Daniel and I are going to be having a photo op where the Stock Unlock logo and things like that will be on the NASDAQ huge board center of Times Square. So for those of you who are familiar with Times Square, we're going to be getting professional photography and doing our best to capitalize as much as we can on this contract spend that we have with the NASDAQ to blast that out, put it on our marketing site, all that fun stuff. I'm going to be going to a t-shirt shop here in New York City to buy some Stock Unlock swag. We're going to make sure everyone's wearing a Stock Unlock shirt to take some pictures there. And we think that we can make a fun day out of it, grab some deli sandwiches, do it New York style, bring them to the park, hang out there, do a little happy hour. We want to try to do, like non-party sober things as well as some happy hour spots. Obviously, whether you drink or not, it doesn't matter. Everyone is invited, but wanted to make sure that we were finding a few things to do. And that would be a day activity. Daniel and I will probably be pretty tired heading around the evening that time. So again, if you are a Stock Unlock subscriber, watch your inbox. There's probably going to be a decent amount of interest to this, and there's only 10 slots that we could put on the mezzanine floor. However, this event is going to be open to everyone outside of that, and we obviously need to communicate with the NASDAQ for who can come in. So it looks like the chat's going wild right now. We know we see a lot of you every week, so thank you so much for the support. as I like to say, we would not be here if it wasn't for everyone, the entire community. And Daniel and I have been tirelessly, but also passionately pushing this company forward. It has been a trip, and we're ready to stay on the roller coaster here. So thank you.
It's definitely been a grind.
Yeah, man. Any comments from you there, Daniel? I mean, you're going to be back here in New York. I'm excited by that. You're staying at a place close by our apartment, which is nice. So we're going to be a walk away from each other. Can't wait.
It'll be fun. Ali asks, wait, are you guys going public? Not yet.
No. Public
That would be fun.
A low market cap. I mean, there's some businesses that did that, like go public on OTC as like a super, super small stock, but not yet. Not yet. That would be fun though.
That would be fun. But yeah, not yet.
Amazing. Well, I'm all out of things to say. Do you have anything, Daniel? If not, we can wind it down here.
Nope. Just, watch your inbox. We will be sending out invites. It's going to be very limited. As Jake said, we have like 10 slots. So let us know. Shelby's coming. She just scared me.
I was like, is it a cat? No, it's a human. Anyways, Shelby, what's up? You're here for the end of the stream so we could give everyone a wave. Yes, this has been a great episode 47 here. We got the whole fam squad deep, cats on the stream. Mark down those bingo cards. Daniel, show Shelby the bingo card. That'll be fun. And yeah, if you're listening on Spotify, come hang out with us live sometime. If you are in the YouTube live stream, great to see you. And if you're watching the recording, comment your stock below and we might just pick it to start off next episode.
Wait, Jake, to finish this off, we should maybe fill out the bingo card. I'm going to live stream it. This will be the send off, everyone. Okay.
I'm ready for Shelby to make fun of us.
Stock Unlock bingo card, Shelby. Here we go. Everyone, we're going to cross it off. We definitely said not financial advice. Another payment processing company. What is their moat? We did not say dollar cost averaging. We did not show the portfolio. I'm wearing a hat. New announcement. We did not say Warren Buffett. No AI. There was definitely a cat in the stream. We talked about India. Am I sharing my screen happened? Another bank stock. Not financial advice for the 5th time. Yep. Add stock to watch list. We talked about Airbnb. No 3Ms. No Brookfield. And no Daniel Prunk slideshow. So we almost finished it.
Wait, we didn't get a bingo?
No bingo.
Oh my God.
We were close though.
This is embarrassing. This has turned to complete debauchery. If you're still hanging out, thank you so much. You guys must be a super fan. Daniel, I got my finger on the trigger on this end stream button. I think we gotta call this one. Goodbye, everyone. See you next week. Bye, Shelby. Miss you guys. See you in New York in October. Boom, boom.
See you soon.